Welcome back to the Crypto Accountants Podcast. I'm Daniel, your host, and every week we sit down with an expert from the Crypto Accountants team to cut through the noise on some of the most pressing legal, tax, and financial questions that crypto users are actually going through right now. Today, we are tackling what I genuinely think is one of the most misunderstood thing in UK crypto, and that is the belief that if you haven't cashed out on your coins or anything, HMRC can't touch you. Sitting here with me to unpack this is Mahad Meraj, legal counsel here at Crypto Accountants UK. Welcome to the show.
Thanks, Anya. Great to be here. And yes, this topic it comes up constantly. Almost every new client we speak to holds this belief to some degree, and it costs people a lot of money when they eventually find out it's wrong.
Okay, I can understand why that would be happening. Let's start from the first principle then, okay? When most people think of taxes on crypto, they picture something like selling Bitcoin, getting pounds in their bank, and then paying taxes on the profit. Uh, that's the mental model, right? But how does it actually work?
It's partially right, Daniel, but it misses a huge amount of the picture. The key concept under the UK law is what HMRC calls a disposal. And a disposal is much broader than just selling for pounds. HMRC has been very clear on this. A disposal happens when you sell crypto for fiat, yes, but it also happens when you exchange one cryptocurrency for another. When you use crypto to buy something, a good, a service, an NFT, when you give crypto as a gift, with one important exception that we'll come to later on, and when you donate crypto to charity, it also is subject to relief sometimes, but generally these are the disposals. So, if, for example, if you swapped your Ethereum for Bitcoin last year, or used some ETH to mint an NFT, or paid for something with your crypto, every single one of these is a disposal. And if there was a gain, if the crypto was worth more than what it was when you acquired it, the gain is potentially taxable.
Uh, I think this is going to be a big surprise for a lot of people, but I just want to make it clear for everyone. Okay, so if I buy Ethereum at 1,000, okay, 1,000 pounds, let's say, it goes up to 5,000. I swap it for Bitcoin. At that moment of that swap, HMRC sees that as me disposing of that asset with 4,000 gain. Is that right? Can you verify that?
Exactly right, Daniel. At the point of the swap, the HMRC calculates the market value of what you exchange in pound sterlings on that date. Um, so if your ETH was worth 5,000 when you swapped it, and you originally paid 1,000 for it, you have made a 4,000 pounds gain. That gain is reportable and is potentially taxable. The fact that you never saw pounds in your bank account is irrelevant to HMRC. You dispose of an asset at a profit. That's the taxable event.
Okay, and what's the tax rate on that again? Because I believe most people would assume that it's the same as other type.
Okay, it isn't really Daniel. So the crypto is taxed under the capital gains tax rules in the UK. The same framework that applies to your shares, your property, and your other investments. For the current tax year 2025 to 2026, the capital gains tax rates for assets other than residential property are 18% for basic rate taxpayers and 24% for higher and additional rate taxpayers. And the annual CGD exemption, the amount of gains you can make before tax kicks in, it has been reduced significantly. It's now just £3,000. Compare that to what it was back in 2022, £12,300. It's been cut by more than three quarters in just 3 years. So the environment has become materially less favorable for crypto investors, even if the law hasn't fundamentally changed.
3,000. That is quite low if you made even modest gains on crypto, that threshold could be easily reached, right? What about okay? So what about people who are like active traders? Does like some people have dozens or hundreds of thousands of transactions per year?
Okay, this is where it gets complex. So every transaction is a potential CGD event. So if you've made 100 trades across the year, you in theory have 100 separate calculations to do, each one looking at what you paid for that specific parcel of the crypto, what it was worth when you sold or swapped it, and what the gain or loss is on the transaction that you've made. The calculation methodology HMRC uses is called Section 104 pooling, which essentially averages your costs across all acquisitions of a particular token. So if you've bought Bitcoin in dribs and drabs over several years at different prices, you calculate a pooled average cost and use that for each disposal. It's not inherently complicated in principle, but with hundreds of transactions across multiple wallets and chains, it becomes extremely difficult to track manually. This is why the crypto tech softwares like Coinly, which we use and recommend to clients, exist, and why people come to us to make sure it's being done correctly.
Okay, I can understand that. So moving on, let's talk about losses because I imagine, looking at the crypto situation at the moment, I imagine like a lot of people there, they are actually going on a loss right now. So can they benefit from the loss? Is there anything that can help them benefit from the losses that they're making?
It doesn't. This is one of the most useful planning tools available. Losses can be offset against gains in the same tax year. So if you made a £10,000 gain on a Bitcoin but a £4,000 loss on a similar altcoin, your net taxable gain is £6,000. And you remember you've got the £3,000 annual exemption on top of that for you to actually be so you'd actually only be taxed on the £3,000 net. And here's a slightly less well known rule. If your losses exceed your gains in a given year, you can carry those excess losses forward to the future tax years. You need to claim them formally. You can't just assume that HMRC will apply them for you, but they can be genuinely valuable in offsetting the future gains. But they can be genuinely valuable in offsetting the future gains. This is why we always tell clients who have underwater this is why we always tell clients who have underwater positions, don't just ignore them. Sell them, crystallize the loss, claim it, and use it. That's the legitimate planning, not evasion.
Okay, yeah, yeah, that makes a lot of sense. Okay, moving on. What about gifting exception? Because I remember you mentioned gifting. You can give to others. You can gift crypto to others. So how does that work?
Yes, this is a really important one, Daniel. If you transfer crypto to your spouse or civil partner, this is not a disposal for CGT purposes. It is treated as happening at the original cost price, with no crystallized gain. Your spouse then inherits your cost basis. This is usually for two reasons. First, it means you can move assets between spouses without triggering tax. Second, and this is the planning angle, your spouse has their own £3,000 annual CGT exemption. So, if both of you are disposing of crypto in the same tax year, you effectively have £6,000 combined exemption to use. And for couples where one person holds all the crypto, splitting assets between both spouses before disposals can make a meaningful difference to the tax bill. I want to be clear here, this only works for spouses and civil partners. Gifting to parents, children, siblings, friends, those are all disposals. And the gain is calculated at the market value on the day of the gift, regardless of the fact that no money changed hands.
That is a trap. So gifting crypto you to your children as a treat or something on their birthday, or let's say they turn 18, I want to give them something big. So if I give them something without any consultation or anything, that could land me in a tax bill. Is that right?
Absolutely, Daniel, and we see it happen a lot. Parent holds Bitcoin for several years. It has appreciated significantly. They think, okay, I'll give this to my kid, but they do it without any advice. And then they find out that at the point of the gift, HMRC is treating it as they sold the Bitcoin at the current market price. The gain is calculated on that value and the tax is due. The irony is that the parent didn't receive any money and they still get a tax liability as if they had sold it. This catches people completely off guard. And the planning solution again is timing and structure. If you want to give crypto to your children, you could wait until a tax year where your total gains are within the annual exemption, or consider whether the transfer can be structured differently across the years. These are the things these are the things we help clients think through before they pull the trigger.
Okay, I think I understand, and I'm very confident that with this, a lot of our viewers are also going to be very careful now. Okay, moving on to the last question on this one. What do you say to people who think HMRC can't, won't know that I'm trading, or I'll just not disclose it? Because when I look at crypto and when I came into this organization, before that, I always thought that okay, crypto trading just is invisible to HMRC. Can you speak on that?
Well, I'd say that the world has changed dramatically in the last 2 years and not in the direction of being able to hide things. So, from January 2026 onwards, every UK regulated crypto exchange is legally required to collect your full transaction history and report it directly to HMRC. Now, this is part of the OECD's crypto asset regulatory framework, which is known as CARF, um, which the UK has implemented ahead of most other countries. Now, HMRC has access to data they didn't simply have before. Um, now, HMRC has access to data they simply didn't have before. And separately, HMRC has been purchasing access to blockchain analysis tools for companies from companies like Chain Analysis, which can trace transactions across wallets and connect on-chain activity to real-world identities through exchange KYC data. The practical consequence is that if there is a gap between what you've declared and what HMRC can now see in your transaction data, that is going to be a problem. The question is whether you want to deal with it on your own terms through voluntary disclosure, which comes with significant reduced penalties, or wait for HMRC to find you first, or wait for HMRC to find you first, which doesn't. So we're not trying to scare anyone, but the era of crypto being under the radar is definitely over.
I would rather that deal with it on my own terms than rather than hope waiting for HMRC to find me, because I think evidently eventually they will. Okay, I think that was a very good walkthrough as to how it works. So I think a lot of the listeners are going to have their minds changed about how they deal with this. And okay, so Mahad Miraj, where can people go if they've been doing some of crypto and they want to get their position right? So what's the first step for them?
Okay, the best first step is that they can just get a free consultation with our team. It's 10 minutes consultation, no commitment, and we can give you a genuine assessment of where you stand. This can be booked through our website, through our socials, and and if you're not sure whether you need to file a self-assessment for crypto gains, the short answer is if your total gains exceeded £3,000 this year, you do. Come and speak to us, and we'll help you with it.
That's an amazing advice, Mahad. And if I'm being honest, I have done some crypto on my own, and I would like to tell this to the viewers that I don't think most people realize how quickly they can cross that 3,000 limit. I would when you're doing a lot of swapping, you don't realize when you have crossed that. So I would highly recommend our users to take up on that offer, even if not just from our organization. A lot of organizations give this offer, so do take up on it. As for well, thank you, Mahat. Thank you so much for being here, and for everyone listening. If this episode was useful, share it with someone you know who holds crypto and hasn't thought about any of this. And yeah, we'll be back next week with another episode. Until then, stay compliant out there.